Hi everyone, a very good evening to you guys. My name is Joseph and this is my weekly Forex market preview. Now, if this is the first time that you're joining me, I want to welcome you and thank you so much for doing so. And if you really like my video, then please hit that like button, or you can even subscribe to my channel because that's the best way for me to keep in touch with you guys. And it's also a way for you guys to show me that you do support what I do. And I really appreciate it. So anyway, I want to first of all apologize for not being able to put out a video for you guys in the last couple of weeks, maybe 3 weeks I think. I'm not too sure. That's because, apart from the fact that the month of March has been my worst trading month to date, I've also been a little bit under the weather, and I've been told by my doctor that I've got sinuses, which means my nose is going to stay blocked for at least the next couple of weeks. So every time I talk, I do sound a bit funny. I'm sure you guys know the feeling. But I was very determined to put out a video for you guys simply because I so want to put the month of March behind my back and kind of start the month of April with a clean slate. And we could potentially have a very busy start to the month of April because I've got 3 trading opportunities that I want to show you guys, and all of them are kind of on the verge of being, at the entry point. Most of them are close to the entry point, so I wouldn't want you guys to miss it. So anyway, as you can see, I'm using a new recorder, so I'm still kind of get myself familiar with how to use the futures. I can't actually get to put myself on the full screen, the webcam, so I should be somewhere at the bottom left or bottom right of your screen. But anyway, let's go over to the chart and I'm going to show you guys what I mean. So the first trading opportunity I want to go through with you guys is actually on the pound US dollar. And what I'm going to do first of all is I'm going to put my chart on the possibly maybe the daily chart, daily chart, and kind of show you guys this area of resistance that the market is approaching. That is going to present us with a nice opportunity to kind of get short, because as we can see, the market has come into a little bit of consolidation down there. I can actually draw this channel here, somewhere there. So we can see that the market has come into a little bit of sideways moving, up and down, and it's now approaching the top end of this channel. So now that should present us with a nice shorting opportunity, and I expect this currency pair, I expect all the pound pairs to be very volatile in the next, possibly the next year or so. As obviously if you guys are familiar with what's going on in with the fundamentals. I don't really pay too much attention to the fundamentals, but as the UK is negotiating the exit plan from the EU, and what have you, and all those little details. So we do expect all the pound pairs to be very volatile. But obviously that's us technical traders, we don't really bother ourselves with that kind of news. We just if the market is volatile, it means we are going to make that's when you see the most trading opportunities anyway. So bring on the volatility. That's all I can say. So anyway, if I drop my chart further down to the 4-hour chart, actually the trading opportunity I want to show you is actually on the 1-hour time frame. So I've got my chart here on the 1-hour time frame, and we've got a potential bearish advance pattern that is setting up. It's actually just a few pips from being completed or getting to our entry point. So if I draw my Fibonacci here, using the top point here as my X leg, from X to A, so I swing high, I swing low, giving me my retracement here. So as we can see, the market comes into the 618 retracement. So that automatically tells us that we are looking at a potential Gartley pattern. But for us to get a Gartley pattern, we have to meet our second rule, which is our B leg has to come in and touch the 618 retracement. But at this time, it's touching the 618 retracement of the A to B leg. So A to B, so we can see that the market has come in and touched the 618 retracement. So we'll be looking for that Gartley pattern to complete. So let me go ahead and draw the Gartley pattern for you guys. X to A leg, A to B leg, B to C, and C to D. So we'll be looking for this Gartley pattern to complete at 125.64. So let me go ahead and draw that line for you guys. I'm actually going to show you guys where all the targets are going to go as well. But I will be posting this chart on TradingView. So if you guys miss it, then you might want to pop over to TradingView and look at my chart. I will be posting this on TradingView hopefully before the market opens on Sunday night. So once the Gartley pattern completes, as you can see, we're less than 20 pips away from 18 pips to be exact, as from our entry point. So we'll be looking for this market to come into the Gartley pattern where we'll be shorting this market. I mean, we're nowhere close to the resistance I showed you guys on the daily time frame. But the fact that the market is in a sideways pattern is in consolidation. Really, whenever I see a pattern, really, I just trade it. A pattern that meets my trade plan or meets my rule, I trade it. So if assuming this pattern completes, we'll be looking for targets. As you know, with advanced pattern, first target, we're looking at the 382 retracement. So I'm looking at first target around 124.49. That's where we're going to be putting our first target. And second target, we're going to be looking at the 618 retracement, which is around 124.48. So let me go ahead and change that to avoid kind of confusion. Let's use a darker color, much better. And in terms of our stop loss, this is the way I do it. For you guys that are familiar with the way I trade, it's usually 1-to-1 risk reward ratio on my first target. So that's where my stop loss is going to go. And it's going to go way, let me just bring this down. As you can see, it's still going to go above my X leg. But it's not going to go above the resistance line that we have on the daily time frame. But that's a different matter altogether. So we'll see if this is gonna, if this pattern completes, we'll see what's gonna happen, if it's gonna give us a winning trade. So that's the one of the first one I want to show you guys, obviously. So as we can see, that line, that resistance line, is still way at the top, but this market could reverse at any point really, because if we look at what happened recently, the market came in there and then we had a little retracement. So all we're looking for is just for a little retracement. We're not looking for a major move back all the way down to the line at the bottom. So we're just looking for a little retracement. So let's see if the market can complete the pattern, and if it does, let's see if it's going to give us that retracement that we're looking for. So moving on, the next trading opportunity is actually on the pound again, but this time is the pound against the Swiss franc. And this is actually on a much higher time frame. I think it was at the 4-hour time frame. Yeah, so as you can see, I've also got my my little resistance line here. So I drew a little resistance line where the market came in, and we had a little bit of structure here. I mean, look at this. This is music to my ears. Whenever I see the market approaching a major structure in the market, and then it forms an advanced pattern for me, and then the market is in consolidation. I mean, I like trades like this. I do love trades like this. This is because this is on a 4-hour time frame as well. It's quite a very, very, like, in terms of what we're going to be looking at for targets, could potentially be a big trade. So what we're looking at here is an advanced pattern, but this time we're looking at the back pattern. So we got X to A leg, and we got a retracement coming into the 50% retracement. So straight away we know we're looking for a back pattern. Excuse me. So let me go ahead and draw the pattern for you guys. So X to A leg, A to B leg, B to C, and our entry point is going to come in at the 886 retracement. So around 126.06. So as we can see, the market is within 24 pips. So it's right about the same entry point as the pound US dollar, the same distance of pips. I mean, so we're looking for this market to complete this pattern, and we can see. I mean, this. I can't stress how good this opportunity is, guys. I mean, you guys. I mean, you need. If you're gonna trade this week, this should be on your radar. I mean, I'm not saying it's gonna be a pattern, a winning trade. I would love for it to be a winning, to be a winner. But like I said, after the kind of week, the month I've had, the last 2 months that I've had in trading, what can I say? I'm just trading my plan at the moment and see what's going to happen. So anyway, in terms of targets, we're going to be looking at the first target around the 382 retracement, which is around 124.57. So as we can see, we're about 150 pips on our first target. On our second target, it's going to be somewhere at the 618 retracement, which is around 123.65. So about 230 pips. So let me go ahead and change that color. Like I say, I will be posting both of these trades on TradingView, just in case you guys want to kind of see a much better view of it. So in terms of our stop loss, well, if I do my stop loss the way I usually do it, which is like 1-to-1 risk to reward ratio from my first target, then it means I have to put my stop loss 150 pips. But this is actually one of the few situations where I am allowed to adjust my stop loss, because this is in my trade, but I am allowed to adjust my stop loss in this situation because as long as my stop loss is at least 25 pips above X. So as you can see, X is around 126.59, which is just 50 pips from my entry point. So I can bring my stop loss all the way down. I think I've already sent this to my signal service, and I've got my stop loss somewhere around 12700. So it's about 93 pips stop loss. So as you can see, it's a pretty good trade in terms of the risk to reward ratio that we have. And the fact that the market has come into a very important region, important resistance area in the market. And I'm going to show you another reason why I think this is going to be a good trade in our next trading opportunity that I will be showing you guys. So as you can see, so this is the bad pattern that we have, the bearish bad pattern. So we'll see if this market completes, and if it does, we'll see if the market is going to give us a winning trade. So moving into the next one. So this is kind of an opportunity where, guys, I'm going to show you guys. I know you guys probably heard people say about trading, people that trade the C leg of a Gartley pattern. So how about I show you guys a trade where you can trade the B leg, the C leg, and the entry point. I know you guys are probably thinking, how is that possible? Well, guys, this is about I'm about to show you 3 different predictions that if it happens, you guys are going to be, wow, this guy's amazing. But the truth is, it's not about being amazing or anything. It's about once you've been in the market for a long time, you can tend to see like future scenarios of what the market is going to do. You can kind of like try to predict how the market is gonna move in the future. And I'm going to give you those predictions based on accurate, based on good technical reasons that the market is likely going to do that. So the trade opportunity that I want to show you guys is on the US dollar against the Swiss franc. And the first thing I'm going to do is I'm going to draw a little line right there. And the reason why I'm drawing my line right there is because if you can see where I drew this line, you can see a lot of important areas on this line, because we had a support here, and we can see a little bit of support and resistance here, where the market kind of like because this is a 4-hour chart, so this is quite an important zone in the market. And coming back here, we can see resistance 4 different times, and then we had a little bit of support there as well. And going back, as you can see, we had a little bit of support here as well, a little bit of resistance here. So coming back to where the market is currently at, so we can see that the market is currently at that very important level. And if I'm bringing my Fibonacci ratio retracement tool, swing high to swing low, we can see that the market is just a few pips within the 618 retracement. So I do expect this market for us to get a little bit of retracement. So if you talk about trading the B leg of a Gartley of an advanced pattern, at this point, I wouldn't know if it's an advanced pattern until the market touches that 618 retracement. If it doesn't, then we'll potentially be looking at the back pattern. So If you remember one of my videos, we were show you guys how to identify advanced pattern like a pro. So this is what first thing I'm gonna do. So this is the first this is the first part of an advanced pattern. So what I would expect this market to do is, these guys, I'm going to show you like 3 different predictions that is likely going to happen. I'm not saying it's going to happen, but there is a high chance it's going to happen, based on using just structure and Fibonacci ratios. So obviously the structure is what I just showed you here in terms of that blue line that I just drew for you guys, the major support and resistance structure in the market. So now we've got the second one, which is using a Fibonacci ratio, where I would expect this market, if it comes into the 6-minute retracement, I would expect the market to kind of respect that 6-minute retracement coupled with the structure on this line, and we are going to see a move back down. And if we do see a move back down, this is what I would expect. I would expect this market to give us another move back down here. However, we do have another support. Oops. We have an important structure here, and if I kind of zoom in, guys, we're going to see that this is a very important support structure, right there. I think it's going to be easier for me to just use that line there. Yeah. So moving back, we're going to see how that support structure. It's not perfect, but we've seen that a few times the market. Look back here. That line was a huge resistance, right resistance, and if the market, if we get a little pullback, I would expect this market to come here. So now let's bring in our Fibonacci and see what do we have. Swing high to swing low. You can see that line comes in very close to another Fibonacci retracement, which is the 786 minute. It's not really it's not a strong Fibonacci retracement line, but it is a Fibonacci retracement line. So if this market does come into that 786 retracement, we would expect the market to rally from there, completing a Gartley pattern. And again, depending on if we actually hit that 6-minute retracement there, if not, then we'll probably be looking for the market to complete a bad pattern somewhere up there. But so guys, this is the prediction. So keep your eye on this one, and I'm actually going to stick with this chart, and I'll try and be going back to this chart from my coming videos. I will still talk about this chart, because I do expect, I want to see if my prediction is going to come through in terms of what the market is going to do here, in terms of from that B leg of a Gartley pattern, us getting a move back down, and then getting a move back down to complete the advanced pattern. So if that happens, guys, I'm not going to be too proud or too arrogant to tell you, oh, I told you so. But it's just a way of trying to show you guys how you can kind of stay ahead of the market if you like. I wouldn't be trading any of these, because they're not my trading strategies. But I kind of, because I'm a technical trader, I do see this, I do have the ability to kind of see what the market is likely to do in the future. So keep your eye on this one. Like I said, I will still refer back to this chart again in my next week's video. So make sure you guys stay tuned in, and we'll see what happens. So yeah, that's all the trades that I want to show you guys. So the reason why I titled this video "The Reality of Trading" is because I know you guys, most of you guys out there like to come into trading and kind of see the good of trading, the good side of trading. What I mean by that, you like to see people that are kind of like showing you like the amount of money they make from trading, or you want people to come in and tell you, oh yeah, I've made 1,000 pips this week or this month in trading. But the truth is that is not the reality of trading. Yes, that can happen. Yes, that happens in trading. Nobody is going to hide from the fact that, I'm sure some of you guys have had one of the best, trading. You've had a very good trading month in your life where you've made 500, 1,000 pips or whatever it is. But the truth is, it's one of the key things that's missing from trading is the consistency, which is why a lot of traders, the bottom line is no one can make 1,000 pips consistently over a whole year. That's the bottom line. You can go any way you want to go with that. and I can tell you that that no one can do that. But the reality of trading here, you are gonna have ups and downs, and ups and downs they are gonna happen. Now, whether you like it or not, this is coming from people that actually trade. If you speak to people that are professional traders, people that actually trade real money, they are gonna tell you that most of the times it's just it's a battle to kind of keep yourself like ahead. I mean, if you want to use that, but it's a very 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 difficult game. I mean, you guys have seen what happened exactly. For example, with my signal service. I mean, starting the month of February, we were just on a high, we were just on a roll really, and then come the month of February, come the month of March, we've down about almost 300 pips. Like everywhere when I look at my Excel spreadsheet in the last couple of months, all I see is just a sea of red, and it's very difficult. That's the reality of it. It's very very difficult, guys. It's not easy at all, but that's the reality of trading. I mean, I don't want to be one of those type of people that would come and just be showing you the good side of everything. Um, but no, I mean that wouldn't help you. That wouldn't help you guys. I mean, if I come here and I show you guys, the good side of trading, people are, you're gonna go about thinking, oh, this is easy, I can do this. Open your account, put some money in there, and before you know it, you've blown your account. So I want to show you guys this is the reality of it. Like, you are gonna go through this kind of patches, whether you like it or not. But you have to be disciplined. I mean, there's no like secret of getting out of it really. I mean, no one is gonna tell you this is the way to do it, or there's some magic formula or whatever. I mean, you are gonna your emotions are gonna come out sometimes when you go through these bad spells. And there's no magic formula, guys. It's all about staying disciplined, coming into the market, and trading every single day. So if I look at my signal service, now this is the month of March, guys. So as we can see, everywhere you look on this spreadsheet is just red everywhere. And this is one of the things that I try to do as a trading coach. Obviously, the main aim is to try and stay disciplined. And if I ask myself, am I really following my plan? Because that's, at the end of the day, that's what's going to matter when you're going through a bad spell of trading. Did you follow your plan? And most times, I look at myself, I say, yes, I'm following my plan. But how do I know that? How do you know that if you're following your plan? Well, I know from my trading, like, I only trade advanced pattern with my signal service. And I'm very selective in the advanced pattern that I trade. And I expect myself, I mean, I take on average 3 trades every week, so I do expect to take myself, to take at least somewhere between 10 to 12 trades every month. And if you look at my results so far, I mean, I'm actually within, it's exactly the same. I mean, 3 months have gone past and I've only taken 30 trades. On a 31, I've still got 1 open position. Because I 31 trades, that's an average of 10 trades every month. So I am following my plan. I am being disciplined. But these are the kind of things that you just have to get through. I mean, there's no escaping. You cannot escape this, guys. And hopefully, I'm gonna sit back here, with you guys, 6 months down the line and show you guys how I did it. But the truth is, I didn't shy away from showing you guys all these bad runs. I didn't shy away from doing that. I mean, look at my equity graph. We're buried down below. So you can see, yeah, minus 288 pips for the year. But why don't you guys just watch me and see what's going to happen? Because at the end of the day, I'm not going to be judged after 3 months. I'm going to be judged after 12 months. And there is a long way to go. It's a marathon. I mean, it's a marathon. So we'll see where we're going to end up at. Yeah, so as I said, thank you guys for your continued support. Really, I do appreciate it. And if you like what you see, like I said at the beginning of this video, then please keep showing that love. And I will see you next time, guys. Good luck.